after the presentation concludes. Should you need assistance during the conference call, please operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Talwar, Joint Managing Director of Talbros Automotive Components Limited. Thank you, and over to you, Mr. Talwar.
Thank you. Good afternoon, everyone, and a very warm welcome to our Q4 and FY24 earnings calls. On the call today, I'm joined by Mr. Naveen Juneja, our Director and Group CFO, and SGA, our IR advisory firm from Mumbai. The results and the presentation are uploaded on the stock exchange and the company website. I hope everyone has seen it. Let me begin with the industry and the economic overview. In FY23-24, a total of 23.8 million vehicles were sold as compared to 21.2 million units in the previous year, showing a growth of 12.5%. Sales improved across all automotive segments, and passenger vehicles grew by 8.4%. Two-wheelers, surprisingly, has made a comeback with a growth of 13.3%, and commercial vehicles remained flat. Domestic passenger vehicle segments increased by 8.4%, reaching over 4.2 million units. Sales are led by the mini SUVs and the SUVs, which grew by 26% to 2.52 million cars as opposed to 2 million in the previous year. In the PV segment, the domestic industry sales mix is expected to be largely skewed towards UV in the segment sales mix, with higher export volume and increasing share of CNG, hybrid, and EV in the fuel mix. Two-wheeler segment increased by 13.3%, reaching 18 million units. Growth was particularly robust in the two-wheeler segment and expected to have a significant potential to grow, primarily driven by expected revival in rural economy and the trend towards urbanization by OEMs. EV sales in FY24 witnessed a strong increase of 41% despite subsidy cuts. Total EV registrations have surpassed 1.6 million units in FY24 as compared to 1.1 million in FY23. EV penetration rate increases to 6.8% in FY24. Passenger cars in the EV segment have shown double the growth as compared to last year. Talbros have good opportunities for growth and expansion in the EV space, as the revenue contribution from EV this year stood at 3% as compared to 2% in the previous year. We are pretty much present in all your Tata Motors EV vehicles, as well as some very prestigious EVs in overseas as well. Coming to company performance, FY24 has been a very strong year for Talbros Automotive. At a group level, including all joint ventures, at 100% value, the company achieved a revenue of 1,258 crores, a growth of 21% year-on-year. Over the last year, in July, Talbros received orders worth 400 crores from both domestic and overseas customers across its business divisions, product segments, and JVs. These orders are to be executed in the next 5 to 7 years, which also includes a multiple EV order of 205 crores from leading OEMs. In November 23, we received another multi-year order of about 580 crores from both domestic and overseas customers across all our business lines. And this includes an export order of 415 crores and multiple EV orders of 270 crores from the leading OEMs, which have to be executed in the next 5 years, covering the product lines of the company: gaskets, heat shields, forging, chassis, rubber hoses. Last month, in April, we received a very large order from a new OEM in Europe for about 1,000 crores. This will come from our joint venture, Marelli Talbros Chassis Systems. A very prestigious order. This order is going to commence by Q4 of this year, and this will be supplied to conventional ICE vehicles and the new age EV platforms for EMEA and NAFTA regions, taken to Europe and to South America. Capitalizing on consistent order inflows from the leading OEMs, we anticipate a strong upward trajectory in our business and profitability. Also, these orders will help us increase our share with the existing customers and new customers across geographies, thereby gaining market share in the coming years. We are determined to increase our exports from 25% to 35% in the next 3 years, with a focus on gaskets, heat shields, forgings, and the Marelli joint venture. Our gasket division had shifted focus towards heat shields a year ago, and it is exceedingly demonstrating a good performance in FY24, where the heat shield revenues came to 44 crores. We have a strong order book in the heat shield division from strong clients like Maruti, Kia, Hyundai, and also now trying to work with Tata Motors, and not to mention, we're pretty strong with one of UK's largest Jeep manufacturer. We are at an inflection point for our joint venture. Our Marelli Talbros chassis joint venture, expanding focus on export and on EVs, is also entering into large suspension products, increasing its customer base and also reaching economies of scale as it gets bigger and bigger, with a new plant expansion happening in Pune as we speak. In January 2024, we have concluded disinvestment of 40% ownership interest in our joint venture entity, Nippon Meatless Talbros. This decision is consistent with our long-term goals, as the proceeds will be invested in future capital expenditures and high-growth businesses such as forging or chassis, and even in gaskets. The trend towards EV is expanding, and we've also strengthened our EV portfolio, securing orders from both domestic and overseas OEMs, and expanding our focus on EVs through our JV Marelli, and from a standard business, the forging business. Also, we are in the process of working something significant through our gasket division, also in the EV space. We're committed to our vision to becoming a global leader as an automotive components manufacturer. In the process, as we embrace and celebrate the milestones achieved so far, we aspire to sustain our growth while advancing the future by being relevant to the services we offer. Furthermore, to make the most on the growing opportunities in both domestic and global markets, we shall maintain our diversified and hedged position as a prime provider of auto components and adhere to a pre-established strategy for augmenting our product line through introduction of value-added products. To conclude, we are pleased with our strong financial results and optimistic about the future of the automotive industry. We remain committed to innovation, operational excellence, and delivering value to our customers and shareholders. With this, I request Mr. Juneja, who is our Group CFO, to give us the financial perspective. Thank you.
Thank you, Anuj. Good afternoon and a warm welcome to all the participants. Let me begin with the financial overview. Our total revenue for Q4 of FY24 stood at 203 crores as against 175 crores in Q4 of FY23, a growth of 16% on a YOY basis. For FY24, our revenues stood at rupees 791 crores as against 653 crores, a growth of 21% on YOY basis. EBITDA for Q4 FY24 stood at 36 crores as against 27 crores, a growth of 32% on YOY basis, and for FY24, EBITDA stood at 127 crores as against 94 crores, a growth of 36% on YOY basis. EBITDA margin for Q4 FY24 stood at 17.1%, and for FY24 it stood at 16.1%. PAT before exceptional gains for Q4 of FY24 stood at 22.7 crores as against 16.9 crores in Q4 of FY23, a growth of 35% on YOY basis. And for the financial year 24, our PAT stood at 82.9 crores as against 55.6 crores, a growth of 49% on YOY basis. ROC for FY24 stood at 20.4% as compared to 16.5% in FY23. ROE stood at 20.2% as compared to 16.6% in FY23. Debt to equity ratio now stood at 0.616x for FY24. In the gasket division, I'm coming to the division wise. The gasket division for Q4 FY24, our standalone gasket sale was 128.3 crores as against 115.8 crores in Q4 of FY23, a growth of 11%. Sorry. For FY24, our standalone gasket sale was 502 crores as against 427 crores in FY23, a growth of 20%. This segment saw a EBITDA of 23.5 crore in Q4 of FY24, and for FY24, this segment saw a EBITDA of 81.5 crores. Now coming to our forging division, in revenue in Q4 of FY24 grew by 26% to 74.4 crore as against 59.2 crore in Q4 of FY23. In FY24, revenue grew by 26% to 276.3 crores as against 219 crores in FY23. EBITDA in Q4 for FY24 grew by 17% to 12 crores as against 10.2 crores in Q4 for FY23. In FY24, EBITDA grew by 39% to 47 crores as against 33.8 crores in FY23. Now coming to our JV company, Talbros Chassis System Private Limited. Our revenue for Q4 FY24 stood at 70.6 crores versus 54.8 crores in Q4 of FY23, registering a growth of 29% on YOY basis. For FY24, revenue stood at 259.9 crores versus 209.8 crores, a growth of 24% on YOY basis. Now, for Q4 of FY24, our EBITDA in this division stood at 10.8 crores as against 9.2 crores in Q4 of FY23, a growth of 18% on YOY basis. For FY24, EBITDA stood at 36 crores as against 25.9 crores in FY23, a growth of 39% on YOY basis. Now coming to our joint venture, Talbros Automotive Limited, revenue stood at 31 crores in Q4 of FY24 versus 28.9 crores in Q4 of FY23, registering a growth of 7% on YOY basis. For FY24, revenue stood at 122.5 crores as against 85 crores, a growth of 44% on YOY basis. Going further, for Q4 FY24, the EBITDA in this division stood at 2.7 crores as against 4.1 crores in Q4 for FY23, a degrowth of 34%. That I already explained in earlier calls that due to some shifting issues, this has happened. Now the things are stabilized, and hopefully things will be very bright in the next financial year. For FY24, EBITDA stood at 9.3 as against 7.2 crores in FY23, a growth of 30% on year-on-year basis. The board of directors have recommended a final dividend of 0.50 per equity share of face value of 2 rupees per share, which is 25% of face value. Total dividend for the FY24 stood at a rate of 35%, stood at 0.7 rupees per equity share, including interim dividend of 0.2 rupees per equity share. Now looking ahead, we see various opportunities for sustained growth in the automotive industry. The company has made substantial investment in new technologies, expanded its capacities, diversified its product portfolio, broadened its customer base, and entered additional markets. Talbros is confident that these initiatives will drive long-term growth for the company and position it to take advantage of future opportunities in the industry. This is all from our side, and I will now like to open the floor to question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, if you wish to join the question queue, please press star and 1. The first question is from the line of Jiten Parmar from Aurum Capital. Please go ahead.
Yeah, good afternoon. Congratulations on a good set of results, Anuj and the whole team. My question is on the capacity utilizations for our divisions, like for gaskets, forgings, and the Marelli and the Marugo JVs. What are the capacity utilization we are running at each division?
Okay, just a minute, I will give you that also. So, just a second, please.
Yes.
And I want to sheet into this out.
And while, if it is ready, yeah.
Our capacity already up the new is around 90% in gasket and heat treat division, and it's with me. 90% in forging division is around 82% to 85%, depending on the product mix. In nipple nickel, around it's not more there. Anti-variation it's around 80%. And Marugo rubber, there are two divisions, anti-vibration hoses. In both, we are touching around 90% capacity utilization.
Okay. So my next question is, since we are, 80 to 90% kind of utilizations on each, when do we need to, basically enhance the capacity, and what is if you can throw some color on that?
Yeah, we are already in the process of enhancing in the gasket and heat treat division. Already, we have taken away new premises on rent in Jharkhand area of Pune. And the supply will start from there in the month of July onwards, hopefully. In the month, not June, July to August, it will start supply. And my plan for capex in this division is around 20 crores for this year. Already started. Capex are already started. In the forging division, we are enhancing our capacity further in machining and in some related equipments. And our hammer, which we set up in the last quarter of the last financial year, 350-ton hammer, I think it has started, the trial run already started last week, and the commercial production will start within 1 week. And we are anticipating around 30 crore of capex in this division in this financial year. Marelli, for which we just explained that we got a huge order. The Pune plant is already under construction. It's an services adjacent to the existing plant. And that shed will be ready by September, October. In the meantime, we already start ordering the machine. We are anticipating a capex of 62 crores, 60 to 62 crores in that division. And Marugo, we are anticipating a capex of around 6 crores in this division. Already, the order has started for that. Take care of our enhance our capacity and to take care of future order which we already have in our hand. Thank you.
Okay. So all this capex, it will take us, basically how much time for that to ramp up to these kind of utilizations? And just to get the revenue potential from all this capex?
We are expecting that the capexes will be, I think all the capexes will be taken care by the third quarter of this financial year. Already started because we expect industry to start because This quarter, you know that because of election, etc., is not very, very vigorous. We expect that it will start from second quarter onwards, and by that time we will be ready with the capacity. We are expecting the last 2 quarters will be very strong in this financial year.
Okay. Now, my second question is on margins for the Marugo JV. They have declined. Any reason for that?
Now, next year you can see a change. We expect a EBITDA margin of 9 to 10% in this division next year.
Okay. And final question is basically on the raw material situation. Raw material prices might have increased. So how are we mitigating that, and what effect will it have in the current financial year?
The prices of the export products by trade has increased because of Red Sea issue, etc. And we already start negotiating with our suppliers, and hopefully we will recover that in next financial year. Already working.
So what is so how much is the lag effect for us to pass on to the increased this thing, or we have a back-to-back?
We take it out for last every quarter we take out the average and the recover.
Okay, great. Thank you so much. If I have any more questions, I'll come in queue. Once again, congratulations. Thank you.
Thank you.
Thanks.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Riham Goel from Spark Capital. Please go ahead.
Hi, am I audible?
Yeah.
Okay. Congrats once again for your great results. But I have a question regarding your industrial segment and what their contribution is to your gasket revenues. And how do you plan on expanding? Yeah, you make industrial gaskets as well, right?
Yeah, it's very small.
Very small.
Maybe 8 to 10 crores. It's small.
Okay, can you put a percentage to it, or is it too tiny to?
It's around 2% of the division.
Okay, all right. Another question I had regarding, so basically exports graph are showing really good numbers, and export auto components are going to increase in the coming year versus in India it's sort of seeing a cool off. So how do you plan on increasing your exports, and how do you plan on dealing with the decreased demand in India?
Because planning to already we have got export orders from various customers, you know that. Already in the pipeline, we in the process of developing that. But the same customer give us more order. And their volume keep on increasing. And in fact, that order value we got is the deem export. We supply to their customer in India, and they will take delivery from premises. And it's a deem exports, not direct exports. There's a huge, and it will be around 1,000 crores is a deem export business for us. So it's a deem export. We will cut the invoice in Indian rupees, and they will take the material directly to there. So
Okay.
It's not supplying directly. They will take it, and they will supply to their plants worldwide of their own. It's a deem export. If I add that, it's around 35% next year. This way up in 25-26 onwards. I can show you.
All right. Okay. Thank you. And I have a third question, if that is okay.
Yeah.
So there's a shift in the market from ICE to hybrid. Do you see the shift directly from ICE to hybrid? What is your opinion? Do you see ICE to hybrid or ICE to EV? And if it's directly to EVs, then how will that affect your top line?
First of all, ICE to hybrid, no change. Okay?
Okay.
The more hybrid, the more component will grow. No issue. Coming to IC, we are not putting components IC also. My 14 division putting IC, even gasket is putting its component IC. But the value will be not
EV.
Yes, in EV. So we are there in, now you can see that my 3% of total top line is EV, which is around 40 crores. If I take total 50 approximately 3%, you can take around 40 crores EV. Now I have got the orders, huge orders, EV vehicles are with gasket division also, and my forging and verily. The vehicles for which we have got export orders are being launched in 25 and 26 only. When they will launch, the component will go.
Okay.
Our products as what Naveen mentioned to you, that we don't get affected whether ICE, hybrid or EV, because we are constantly innovating and putting our products in EV vehicles.
Yeah.
All right. Okay. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah. So thank you for the opportunity and sir, congratulations on the stellar set of number. So my question is on the order book side, like if we have 1,000 crore of order, so that include EV also, and how much is the EV order book?
Yeah, Naveen, you have the breakup with you?
I have got the breakup of last three orders which I got from last July till now. I have a breakup. Out of this 2,000 crores of order which we have received from last year till last month, for last 1 year, out of which 475 crore is EV. Okay? And 415 crore is about export. This order of Marelli, it will be export. It will go in export. We are not aware how much it will go to IC, how much it will go to EV. We have no details available with us as of today. Okay, but it's the component which goes in both the type of vehicles. There is no change in that.
Okay. And sir, as we have mentioned in the presentation that we are targeting 13% CAGR by 27, and also you mentioned the category segment-wise top line. So, like, what are the strategy and what are the positive thing that we are seeing, and which are the OEM from where we are seeing very good order book. So if you can explain on that one.
As we say, division, we mentioned a top line of around 700 crore, I understand. Is okay? Right? We already achieved 500. We have still 3 years to go. And here we are working with some export customers. I think we are in the process of closing some good orders from those customers for EV space. I think in the next 6 months we'll be able to have some big order from them. Plus, in the Indian front, we are just entering Mahindra in a big way now. We will start developing heat shield and gasket for them, and hopefully in next 1 year you can see a huge jump in that. Plus a normal growth of 8% to 10% of business, which will easily cross 700 crore there. Easily. Now coming to my forging division. Forging division, we anticipated I think 500 crores in this business by FY27. And last year we closed at 276 crores. It has a huge backlog of product developments. We are working on that. We are getting very good order. Order book is lying with me for JCB, for Dana, and Meritor. We have just concluded the audit I think yesterday only. Plus other customers we are sitting on my head to expand their portfolio. And we expect this business to grow about 25-30% per annum. On the basis of the order book they are having, plus the potential order, we are working on that. The only problem is product development time. That is the only issue here. Now, I think in Marelli business, we anticipated a top line of 700 crores. Last year, they closed about 270 and around that, 260 and 270 crores. With the order of this order we have got of 1,000 crores, you can see exponential growth from 25, 26 in the business. And we are hopeful that we'll be able to achieve this 700 crores very easily. I think next year, they will be 300 something, after they will be 500 plus with the order book they have got. And coming to Morvo, last year we closed 121. This year again we are expecting a growth of 20% plus there. And I think we put a figure of 200 crores. Easily we can cross that figure. We have new technology rules, etc. coming from Maruti, and we already thought of that. So I don't feel, plus Mahindra, we are working with Mahindra for the whole business. Hopefully we are quite hopeful to cross that figure also. That is a brief.
Okay, thank you so much, sir.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and 1. The next question is from the line of Uttam Purohit from Monarch Network Capital Limited. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on great set of numbers. So my question was around the margin side for the quarter. So if I look at the margin of forging and the Marelli business, it has gone down by some percentage, and on the contrary, gaskets has gone up quite a bit. So is this impact on margin of Marelli and also the forging business, is it because of raw material prices? And can you please also comment on the improvement in margins of gaskets?
Margin of, I think, Marelli is now holding between 13 to 14%. Okay, 13 point some percent margins there. The reason is because of the product mix. The more the export, the more the margin. And I think this margin will grow further. It will be, I think, next 2 years we should be touching around 15% here in this with the export business, with the business coming in where the margins are good. We are hopeful it can go up to 15%. Next year it should be around 14%. After that, it should be around 15% plus in this business. And the second thing, what you were saying about forging something or something, I just missed that.
There's a bit impact on the margins of forging business as per, and also there's a great improvement in the margins of gasket business. So can you just comment on both of them?
Please don't see quarter, see the year. I always say see the year. Some price increases come in one quarter, it's the impact of that in one quarter. For a full year, on a standalone basis, we had a margin of 16.1%, I think, for last financial year. We are hopeful that it should be hovering around that for the next year. After that, it can go up further, the more export and more. It can go up to further, but don't expect 20%. I will tell you earlier also, don't expect that. It should be 0.5% here and 0.2, 0.5%. It will be hovering around for next financial year only. After that, it can, let's see after 1 year. I think with the benchmark, we about 16%, we have already achieved that. We need to stick to that benchmark first and see. The more good businesses, export business we get, the more margin we come. We are working on that.
Great. And this amount we would receive from the disinvestment and JV, so it would be utilized towards internal capex, or are we planning to acquire or do some acquisition?
I'm talking about the normal business. We are okay. We are still working for that, for JVs or some new acquisition. Not really for new JVs or TA. We are working on that. Let's see when it matures. We are working on that very seriously.
We're working on a few new projects. Technology transfer, but not acquisition. Right now, JV working on.
Great. Just one bookkeeping question. So I can see our non-current investments have gone quite up a bit, and I can see some cash inflow from our disinvestment from the JV. So can you just explain me what things are, how the transaction has proceeded till now?
Pardon me, what you said? How the transaction?
How much the transaction is proceeded? Have we received the entire amount, or is it part pending, and the increase and the substantial increase in the non-current investments?
Yeah. Absolutely right. We received 81.80 crores in the on 25th January. And after paying the taxes and some expenses, legal expenses, we left with a figure of about 65 crores, which we are invested, and for a period of more than 1 year in the government securities, and it's lying in the non-current asset because it's more than 1 year. It's already with us.
Okay. Thanks. That's all.
Income we are getting about 7.75 to 7.8% average return we are getting on that.
Great. Thanks. That's all my side.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Shikha from Time and Tide Advisors. Please go ahead.
Hello, sir. Good afternoon. Congratulations on a great set of numbers.
So I wanted to inquire about our non-auto businesses, which we had started, I think, sometime last year. So I wanted to understand how those are moving for us.
We have not started any non-auto. Acha, okay, non-auto business.
Mowers and stuff.
And my offloader business. Offloader business.
An offloader.
Offloader business is doing very well. Last year, I think my in forging division, 40 crore business is offloader business. If you see, forging only, my offloader share is hovering around 40%. I mean, less than that. Just a minute, I can tell you. It's doing very well. And we are able to, I think this year it will go further. Forging business, my share of two-wheeler agri and offloader is 48%. Of this, it include agri also. For offloader, we did around 40 crore turnover out of 276.
Okay, understood. And this is again mainly in Europe, right?
Yeah, you are right.
UK. Understood. And so another bookkeeping question. This quarter, I think our other expenses were up as a percentage of revenue. Was there any one-off in that or related to Nippon Leafless or something?
One-off is in forging division, my freight.
Okay.
Is one-off. Reason being, I'm just giving you background. The one is Red Sea issue. It started in December somewhere. It carried out for the full year. Plus, because of the Red Sea problem, my container was stuck because of Hamas issue, etc. And we need to send some, I think, 8 to 10 shipments to JCB by air. So that component, spend more than 1 crore on that. That component added water. So that is the only thing regarding the Red Sea thing we'll able to recover in future quarters. And that is the one time of course.
Understood. Okay, that's it from my side, so I'll come back in the queue.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next follow-up question is from the line of Riham Goel from Spark Capital. Please go ahead.
Hi, sir. So another question I had was last year EVs contributed 2% to the company's revenues. This year it reached 3%. So how exactly are you projecting 12% in the year FY27? What is the rationale behind that?
Yes, order acquisitions that we're working on.
Already we have the orders. I'm telling you, if that model of where we have got orders, I think it will be close to that. That vehicle, I think, which are going to launch in this October, November, have been delayed by 6 months. The UK vehicle manufacturer delayed the launch of EV by 6 months. That's why you can see order is there. Whenever they launch, we will be able to supply there.
Okay. And now that you've exited from Nippon, will you still be offering non-asbestos gaskets in your product portfolio?
No.
Yeah, that's a core product. Non-asbestos, yes.
Okay,
Yes.
so you'll continue.
No, not spinal asbestos.
Okay.
Yeah, we'll continue non-asbestos gaskets. That's the core. Yeah.
Ms. Goel, you have any further questions?
No, I'm done. Thank you.
Thank you. A reminder to all the participants, if you wish to ask questions, please press star and 1. The next question is from the line of Divyam Gupta from Gupta Family Office. Please go ahead.
I am audible?
Yes.
Yeah. Okay. Hi, sir. My question is again regarding our margins. So we did 16% operating margins in FY24, and in your presentation, you have guided for a similar 15-16% by FY27. So
Yeah. Hello?
Sorry for that. The line for the current participant has been dropped. So we'll move on to the next question. The next question is from the line of Satish Kumar. Please go ahead.
Hi, sir. Thanks for the opportunity.
Again, bro.
Got it. And so lastly, on our aftermarket division, do we have a strategy focused towards that, or are we currently just focusing mainly on supplying to OEMs?
We are trying because the gasket aftermarket is not very huge because you know that these days we don't open engines so frequently. Our main focus is OE and aftermarket OE business. Our aftermarket OE business in export and in OE business and export. Not in domestic, we are not focusing.
So just correct me if my understanding is wrong, but the aftermarket export business would have a higher margin, right?
Yes. But the range is very, very huge, very big range, small numbers. This is different type of issues there, you know that.
Understood. Okay, sir. Thank you so much for giving me a second chance.
Thank you. The next question is from the line of Divyam Gupta from Gupta Family Office. Please go ahead.
I hope I'm audible this time, sir.
Yeah, you are audible.
Yes, you are.
Thank you, sir. My question was again regarding our margins. So we did 16% operating margins in 24, and in our presentation we have guided for a similar 15-16% by FY27. So do we expect it to remain range bound going forward? But sir, my main question here is, shouldn't it increase and reach about the 18% range as our share of exports increase?
I think we will wait for 1 year and then we'll come out with our numbers. We are going to wait for 1 more year before we revise our guidance.
Okay, so but you do expect it to inch upwards, right?
Of course, our aim is to increase.
Yes.
We are there for that only.
Okay, great.
Yeah,
And
inch upwards, yes, correct. That would.
Perfect, sir. And if I heard you correctly in the call, someone just spoke about a 13% revenue growth guidance going forward. Do you stand by it?
Yes.
Okay. Thank you so much. Thank you so much, sir.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Satish Kumar who's an individual investor. Please go ahead.
Sir, am I audible?
Yeah, you are audible.
Okay, thanks for the opportunity, sir. Sir, it is in one of the research report, it is mentioned like large scale adoption of EV could render many of the company products obsolete as gaskets are not required to same extent in EV. So how do we see that, sir?
Sorry, your voice was not that audible. Please can you repeat slowly?
Yeah, sure. In one of the research report, it is mentioned like a large scale adoption of EV could make many of the our company's products obsolete as gaskets are not required to the same extent in EVs. How do we see that?
Sorry, I could be not able to get your question.
Can't hear you.
Some research report, it was mentioned that.
Can't hear you.
Anuj, are you able to understand? I am not able to.
No, I can't. No, cannot hear.
Okay, let me rephrase. So, research report saying many of our company products like gaskets may become obsolete if when there is large scale adoption of EVs, because they are saying
our products don't get obsolete. In gaskets, we are basically into very heavy duty engines like trucks and out-road segments and tractor segment. So very well protected out there. We are also in some two-wheeler gaskets, but those are also mostly motorcycles. So they don't get obsolete. Tomorrow morning, the whole world will change and you have EV buses, EV trucks, EV cars, and there's no ICE engine. Then something happens. But in the next 10, 15 years, we have signed contracts with our OEM called Cummins, where we're going to continue to make gaskets and design for them. And otherwise, all our other divisions like forging and chassis and other, there's nothing going to happen. And we are constantly evolving product portfolio to cater to EVs and also batteries.
Okay, sir. Thank you. One more question. So are we expecting more similar large orders in FY25, sir?
So we are expecting.
We are working every day.
Yeah. Even with the EV increasing in EV, our gasket division is growing 17 to 18, I think 18 to 19% last financial year. So growth is coming from there. And new products we are evolving in the engine, outside the engine, in the EV, everything is there. We are growing, we will keep on growing irrespective.
Okay, sir. So are we supplying products to CNG vehicles also?
Yes.
Yeah, we are.
Yeah.
But
What is gasket?
Okay,
Sealing product. It's a sealing. Gasket is a sealing product. Sometimes we seal the engine, sometimes seal the exhaust, sometimes seal any where the two metals mix is sealed. In the gas cylinder also the sealing is there. Everywhere.
Okay. Okay, sir. I'll be very best. That's it from my side. I'll be very best.
thank you.
Thank you. The next question is from the line of Atul Daga from AAA Securities. Please go ahead.
Hello.
Hello.
Yes, sir. So, by FY27, we expect our EV share to increase, and the guidance is given in it's approx 12%, right? Now, my question is, which category do we focus to cater on, like passenger vehicles, commercial vehicles? Because in ICE segment, we majorly cater to EV and
EV vehicles. Our EV business is only PVs, mostly PVs.
Right. So my question was the same. Which category are we going to like focus on CV as well?
Sorry?
CV, we are focusing, our focus is everywhere, but nobody is developing a electric CV at present.
Okay. Okay. So also in continuation to the same, how will capex requirement will change as we focus more and more into EV space?
Not much, of course, not really. If you make EV sometimes required like for motors, they are developing gaskets made of rubber. We already made gaskets made of rubber here. So those machines will be added more. And we are developing a new product for a battery. If that products come online, we have a separate line for that. Can't comment on that. But nothing major is going to invest.
Okay. Okay.
Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Yeah, thank you so much, everybody, for joining the call. And I'm hopeful that we'll be able to answer all the questions that were put up. And as we said earlier as well, we maintain that with our hedged automotive strategy and different product lines that we are in, we see a good and a bright future. Thank you. Bye.
Thank you.
Thank you. On behalf of Talbros Automotive Components Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.